This is your LMAX exchange technical update for Friday, March 24th, 2017. Euro dollar. So the euro is stalling out into some critical resistance in the 108 to 109 area as the market looks to pull back after trading up towards this neckline of what could be an inverse head and shoulders formation. Again, over the past several days, we've seen the euro bid up, which has taken the form of this inverse head and shoulders, and a break above 108.75, the December peak, that December 2016 peak, would do a good job of solidifying that formation, opening the door for major upside potentially towards the 114 to 115 area. At the same time, if the market is unable to establish above 108.75 and stalls out in here, we could see renewed declines and a resumption of the broader downtrend, taking us all the way back down to the 2017 low around 103.40, which guards against the parity level further down. For now and over the coming session, the key levels that you want to pay attention to above or below are 108.75 above, that's the December 2016 peak, and below you want to look at that low from the 16th of March, which comes in around 107.06. If we see a breakback below 107.06 and the market closes below that level, it will start to take the immediate pressure off the top side and once again suggest that the market could be rolling back over to negate the possibility of this inverse head and shoulders formation. Sterling dollar. So cable has come up into this critical resistance zone in the 125 to 126 area and is showing signs of exhaustion once again as it looks to adhere to what has been a very well-defined downtrend. We could see now a resumption of declines that takes us back down eventually towards the 2017 low from January at 119.87, which guards against that more critical support in the form of that October 2016 plus 30-year low around 118.40. For now, though, over the coming session, a breakback below recent support at 24.24, the 22nd of March low, will do a good job putting the pressure back on the downside, while a push back above 126 would suggest that the market could be looking for a retest of that critical December peak at 27.75. But again, rallies are expected to stall out up into this into this 125 to 126 area, with only a breakback above the December 2016 peak at 27.75 to force a shift in this structure. Dollar yen. So dollar yen is broken down this week below some key range lows at 111.60, and that break does suggest that we could see a potential 400-point move to the downside towards 107.60 over the coming days. This is because we had seen a range between 115.60 and 111.60 for several days. That's a 400-point range. So again, the break of the range now projects potentially 400 points lower to 107.60. At this point, any rally should be very well capped with only a break back above recent highs that we saw around 112.87 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss remains confined to a downtrend but is having trouble extending declines over the past several days as it runs into some very good support down ahead of 106.24, which is the 2016 low. But at the same time, rallies continue to be very well capped above 108, and there is risk for a lower top and fresh downside extension to lows below 106.24, exposing the 105 psychological barrier further down. Aussie dollar. So Aussie has been showing signs of rolling over the past several days after once again stalling out into critical medium-term resistance up around 78. Look for these latest setbacks to extend back towards recent support at 74.92, the low that we saw on the 9th of March, with a break below there to accelerate declines down towards the psychological barrier at 70. Dollar CAD. So dollar CAD has seen setbacks this week extend down towards 32.64, but overall here the market remains quite constructive and dips are supposed to be supported or expected to be supported in favor of a higher low and fresh upside extension back towards the critical multi-day peak at 136, above which would expose a move towards 140. Any setbacks that we do see should again be very well supported, ideally ahead of 132, with only a break all the way back down below 129.69 to delay the constructive outlook for dollar CAD. Kiwi dollar. So the New Zealand dollar is once again rolling over after this latest rally was very well capped up ahead of 71, and the market looks to be breaking back down with a break below recent support at 68.62, going back to December of 2016 to open the next major downside extension, exposing the 65 area. At this point, any rally should continue to be very well capped, ideally ahead of 72, in favor of fresh weakness. SPX 500. So the S&P 500 has seen a breakdown this week after taking out some key support at 2350. This sets the stage for the fresh downside extension towards next key support around the 2300 area over the coming sessions. Any rallies here should be very well capped up towards 2375, with only a break and close back above 2380 to really compromise this corrective outlook, this newly adopted corrective outlook in favor of what could be a resumption of gains to fresh record highs beyond 2400. Gold. So gold remains highly constructive, with the market putting in a base off the 2016 low, putting in a series of higher lows and higher highs, and this latest rally could be looking for a break back above recent highs in the 1265 area, which would confirm a higher low around 1200 and open the door for a measured move upside extension towards the 1330 area. At this point, any setback should be very well supported, ideally ahead of 1200, with only a break back below 1180 to compromise the constructive outlook for gold.